It's April 24, 2014, current time 10:23 GMT. Jay Meisler here with the daily Forex trading outlook. Draghi spoke today. He didn't disappoint the Euro bears, but the market has not reacted much to what he said. Really nothing new except that he highlighted the importance of the euro-dollar exchange rate, his policy decisions, and he hinted again of lower rates if needed. So far, it's all talk, but best we could say at this point that there's a limit on the euro-dollar upside. If it gets too high, the ECB likely react by easing policy, so why take it higher? On the other hand, something is supporting it. It's probably capital flows, certainly not spec flows. And best we can say at this point, the high for the year is in, probably at 139.67. And we have to take out 136.70 really to confirm a downtrend. As far as the market otherwise goes, I think you've got to look at what this closing pattern has been. I pointed out it's now 8 days. We've closed between 138 figure and 20. Most of those have been between 138.13 and 20. One exception was on Monday when we closed just below 138. If you look further down, out of the last 11 days, 10 closes have been above 138 with this one exception. The 10 days prior, we had closes with a 137 handle. If you want to take a very simplistic look, 138 is going to set its tone. Similarly, 102 in the dollar yen and 168 in cable. If you want to add those in as well. But why 138? It's this very psychological level. You'll see how your sentiment swings if it goes below it. And if we go below it, then we can still hold out for an eventual move down to 135. That seems to be the risk as long as the top is in. But this market has been very frustrating. Low volatility and rewarding range traders rather than breakout traders. Today we have U.S. durable goods coming out, weekly jobless claims. But if you look further ahead next week, we have the FOMC meeting, and most important would be the Eurozone CPI on April 31st. And that is going to help set expectations into the ECB meeting the following week. If inflation ticks up, we can discuss this next week. Just be aware it's coming out, and that could restrain the market in the interim. Otherwise, as I said, eventually, the sentiment, and my sentiment as well, is that the euro dollar is going to eventually move to a lower range. Question is when and under what conditions. But for now, at least we know the top is in, and usually when that happens, we usually get an eventual move to a lower range. So on the downside, watch 137. If you go to let's look at the 4-hour chart quickly. I posted this range at the beginning of the week, 137.79, 138.64. We've traded within it. We got to take out this 137.79 level to open the door to at least a 100-day moving average, which comes in at around 137. I think right now it looks here around 23 or 24 or so. So what do we have for today? We got to watch the closes above 138.20 would kind of break that pattern, but below 138 would perhaps signal a move back to that 137 handle closes. But we have 1 day of a fake out. So just be aware that we are in this low volatility environment. I wrote an article about this. I pointed it out. The link is at the bottom of this page. It's kind of one if you want to survive in this market. And I read an article today that said this low vol market could last for months. This is I think a must read. All you do is click on it, read the article. Feel free to discuss it here, or you can contact me directly. But I do suggest reading it. So it's a simple click, and then log in to read. So good luck, good trading today. Durable goods and weekly jobless claims results coming out. Focus probably on the stock market.